Good morning. Please take your seats. Thank you very much. Good morning, and thank you for attending the roundtable of the 14th edition of the Spain Investors Day, titled The Role of Large Investors in the Development of the Spanish Economy. The participants of this roundtable are Enrique de Leyva, founding partner at MAGNUM CAPITAL, Jaime Siles, Executive Director of IFM, José Curbelo, President of COFIDES, Juan María Nin, President of ITP AERO and Senior Advisor of BAIN CAPITAL. This roundtable is going to be moderated by Lara Hemzaoui, partner at LINKLATERS. Lara.
Thank you very much for the introduction. It is a pleasure for me to moderate this talk. And good morning, everyone, and welcome to this roundtable, where we will address the impact and the influence of major investors in the development of the Spanish economy. Spain has been, in the past years, an increasingly attractive destination for investment. And today we are very privileged to be joined by some of the players leading that trend. During the next 40 minutes, we will analyze the reasons why in the past years Spain has been chosen as a place for investment and whether that continues to be the case. I hope that this conversation produces a productive dialogue and that helps all of us to understand better the future of the Spanish economy. And without further delay, as a starting point to open the discussion, we are just ended 2023 and facing the start of a new year. I would like to hear your views on your assessment on what the M&A market has been during 2023 and what are your prospective views for 2024. Juan María, do you want to break the ice with this one?
Oh, why not? Thank you very much, and to begin with, special thanks to the organization and many, many thanks to you all for attending this very important meeting, a traditional very important meeting for all of us. Short, straight to the point, inertia. Of course, there are some deals going on, that's nice, that's good, but there is no special enthusiasm. So overall, not only in Spain, but probably also in Europe. So I think the situation is cool and cooling. And looking at the future, which is the second part of your question, I do think that, yes, there are some question marks involving European Union and in particular some European countries that will bring in additional, not freezing, but cooling to this kind of deals. And all of them are related with the new rules we'll have to jump into in Europe in terms of controlling sovereign debt. In the case of Spain, which is where we are most interested, we have maturities going on, very important, beginning second part of next year. We had a good experience in terms of a real experience in 2012. And I do think that this is on the table at this particular moment, even though has not been formulated as explicitly as I am. So we will need, along these two first quarters of this year, to have a clear view on what's going to happen with deficit and debt and rates of interest in order to make sure if this cool situation where we are is going to improve or definitely move to a frozen situation. Thanks.
Thank you very much. José Luis, what are your views in this regard?
Thank you very much. Thank you very much to the organizers for inviting COFIDES and myself to this meeting that I hope it will consolidate. It is already consolidated as an important venue for discussing about the Spanish economy and the future of the Spanish economy. Also, thank you, all of you. Well, I share the opinion that Juan María had regarding the inertia. Some of the analysis. I disagree a little bit upon in the perception regarding what foreigners think about the Spanish economy. If you analyze the last data about greenfield investments, of course, greenfield investments are not actual investments, are investments that are being announced. But this is a statistic that is worldwide. So if we take the data on greenfield announced projects at world level, we find that the number, by the amount and the number of projects, Spain is the 6th country in the world in greenfield projects being announced. It's the 3rd at the European level, higher than the other big countries in Europe. So somehow the perception that there is about the Spanish economy, for reasons that all of us know, is that, as the minister was saying before, for the first time in history, Spain has an important place in energy-related activities and many other things, and others that are things that are not part of, are not casual. Spain for many years has been investing in human resources, has been investing in technology, has been invested in renewable energies, and so on and so forth. So you see that Spain is attracted for foreigners. And for instance, one of the things that is this tendency has been accelerated during the last 5 years. For instance, the number of projects that have been announced during the last, of new projects have been announced during the last 5 years, have multiplied by 3 those that were announced during the previous 5 years. So we have to tone down or to reflect regarding the attractiveness that Spain has for foreign investors. And finally, it's not only that foreigners are calling for projects in Spain in bigger number and in bigger amounts, but also is sectorally, they are evolving towards different sectors. It's not real estate and tourism, the big amount of projects that were announced, but today, most of the projects that are being announced are in renewable energies, in automotive, in batteries, in biopharma, and so on and so forth. So, while I agree that at the contextual level, this inertia type of situation, and there are many risks around, I will tone down a little bit the message regarding the attractiveness of the Spanish economy for foreigners.
Okay, I think we are lucky having Jaime here as a representative of a foreign investor. Do you agree with that, Jaime?
First, thank you for inviting myself and IFM to this forum. So in terms of your question related to 2023, I think it's been a very slow year. And the reason for that, in our view, is because actually there were few deals because buyers and sellers couldn't agree on prices. And the reason for that is because they couldn't agree on assumptions. So we've been, since 2012-13, having a very stable monetary policy and very clear views on inflation, which are 2 key inputs for financial models. But in the last year, a seller would tell you interest rates will go down, so your debt is going to be cheap in 2 years. And buyers, we were saying, look, it's costing us 5% plus margins. And that also turns into higher cost of equity. So for that reasoning mismatch between assumptions of buyers and sellers, there was no matching in inverse expectations. So the second reason is there was less money in the market. So I think, especially in the terms of fund management, it's been a very slow year in terms of fundraising. The end of 2022 with the Liz Truss government in the UK, where there was a lot of turmoil and pension funds reallocating back into bonds and equities and especially liquid assets and less into alternatives, that put a drag into the momentum we had as funds, and that especially affected close-ended funds. So you could see lots of close-ended funds that were not able to raise new funds and were pressed to, before doing that, having to divest their current assets. And because of the first reason I mentioned, which is they were not able to agree with their potential buyers on prices, that just put a stop. So for 2024, I think the key will be if everyone can agree on what the interest rate curve will be over the next years. And I'm not sure we'll be able to, because there's still geopolitical turmoil, which will drag on into inflation. So that's the biggest unknown right now. So we'll see.
And just to complete the picture, from a more national standpoint, what would be your view?
Well, first of all, thank you all for being here, for inviting me. I agree with Jaime that in general the investment conditions have deteriorated, between inverted commas, because of interest rates and financing, etc., etc., etc. Having said that, data are data, and I like data. And if you look at the part of the elephant that I see, which is the private equity markets in Spain, if you look at 2023, the number of deals was similar to all deals, perhaps not in the larger segment space, but in the middle market, there was a similar number of deals, and deals were closed, and there is a significant deal flow. It is true that prices are not as high as they were, but such is life in the big city, because of course interest rates are higher, and returns, and therefore require returns on investments are higher. But the reality is that transactions are happening.
Okay, thank you very much all. José Luis, going more into the detail, from the COFIDES perspective, how do you see the role of sovereign funds as long-term investors in strategic sectors in Spain?
Well, whenever we talk about sovereign wealth funds, I think that we are talking about a big universe.
That's true.
COFIDES is the sovereign wealth fund of Spain, and we have nothing in common with Mubadala, even the salaries. So the reality is sovereign wealth fund at the end, sovereign funds at the end are funds that are nourished from fiscal resources or from surplus that are in trade. So the countries that have oil and hydrocarbons, and they are investing everywhere. There are other funds that belong to governments that are willing to invest with their own companies in other countries. For instance, COFIDES, one of the activities of COFIDES as a sovereign wealth fund of Spain is investing with Spanish companies abroad. So we are participating with a lot of Spanish companies in projects in third countries. Other countries have similar funds that are investing in Spain. For instance, we have an agreement, or we are working with BPI France, whenever we support companies, French companies, and we co-invest in French companies willing to invest in Spain. And vice versa, we could collaborate with them in projects that are developed by Spanish companies in France. So that is to say that the reality of sovereign wealth funds is a very different reality. For instance, we have last year here in September the World Meeting of Sovereign Wealth Funds, and there was a fund from Palestine that probably doesn't exist anymore. But there was a sovereign wealth fund of Palestine that was the one managing the resources that international lenders were allocating to the country whenever the country existed. So that is to frame. Of course, sovereign wealth funds, when they invest, they want to have profitability. So they are willing to invest in projects that are either with a strategic value or with no strategic value, but for profit. So it's not a subsidy-driven type of investment. So in this sense, I think many people think that the sovereign wealth funds could be actors for development, for instance, for third world countries and so on. Well, it could be, but only as long as the rate of returns that they obtain in the investment, whenever they invest, is appropriate. So here there are many, many discussions about if that is possible or that is not in places of it with a lot of uncertainty. So.
And particularly, I think, if they invest in strategic sectors. In this regard, Juan María, what would be your views in connection with protection measures that governments may put into place to protect strategic investments for the country?
Well, quite a good question, I must say, no? Delicate question. Look, I will begin with a lawyer's consideration, which is that we are competing. The playground is a very competitive one. So we compete in between countries, which is very good. We compete in between sectors, companies, etc., etc. And there is something, I come back to my point as a lawyer, which is the reciprocity. No? So if other competitors play the game with the kind of clauses and legal procedures or regulations that provide them with a kind of, let's say, last word and protection of their national systems, it would be quite stupid on our side as Spanish people and country not to have the same kind of governance in respect of that. So there's nothing fundamental against the fact that governments take decisions upon state legislation, practical decisions, in order to make sure that for certain sectors, public utilities, to put an example, or defense, I'm using the most obvious in favor of my argument, yes, there are rules which must be implemented. Second, of course, these rules must have clear-cut and defined timing sessions, in the sense that these rules can change depending on what the situation is, geopolitical or economic or whatever it is, or who is the investor trying to jump into a strategic or not so strategic sector. And third, all this must be developed and must be performed with serious agreements. So in this background, what do I think? Reciprocity, it is necessary. We all need serious governments to make clear which are the rules of the game, and those who are interested to invest must comply with, and it's free for them to accept or not to accept. In the present situation, perhaps on what I'm saying, I'm biased in the sense that my positive experience, and I'm going to talk about, have multiple experiences investing in different sectors from private equity on both sides of the equation. But the last one, which is ITP, ITP is the second engine manufacturer for aircrafts, but it has a very important component, which is defense. We, as a private equity fund, as BAIN CAPITAL, we have had very serious negotiations with the government, and this is legitimate. The good thing is that finally, after this negotiation, the outcome has been the outcome that must be. The question is, how do you come in? Do you accept the rules of the game? Then be ready to negotiate. Does it make sense? And also very, very important, and I finish here, exit. For those investors that are taking these decisions, exit is fundamental. So in this, let's say, regulation on which are the rules of the game, I think everybody must make clear which are the exit requirements in order not to jump into unforeseen problems the day after.
Enrique, what would be your views in connection with it?
Well, I agree with Juan María Nin always, who is a good friend apart from admired executive. I agree with Juan María Nin 100% of the time, almost every time, but not this one. This one I only agree 60%, in the sense that I think that protection is fine, but it has to be on an exceptional basis and not on blanket rules. And in general, when the government speak about protection, they speak about blanket rules that apply to everyone, like the escudo antiopas. And the escudo antiopas, for instance, deter demand, extends processes by 1 month or 2 months. And in the end, I would like to know how many transactions that have been put in front of the competition authorities because of the escudo antiopas has been stopped. And I am sure it's a very, very, very minor percentage. So I think that, yes, we must not be silly and naive, and we may have to play with the rules other people play, but that can be done in many ways, and not through blanket rules.
But Jaime, for example, in your view, do you think that that should be combined with an effective process management for investments to be suitable of being carried out in an expeditious way?
I mean, our experience was not bad in that respect. So, I mean, as investors, we are not policymakers. So we try not to get that wrong. We just read the scene and operate. So it is what it is, as Juan María was saying. It's the new rules. We understand why we're there. We're a long-term investor, and we don't have exit requirements, so we don't need to sell. So in that sense, if the new reality is you need to comply with these measures, and you need to engage with the governments, and you need to be a palatable investor, being very selfish, we're very happy with it, because we think we are as good as any investor can get. Because we are long-term, we are from a friendly country, we manage very transparent money, we have a very good track record. So in that sense, that clears the space in terms of competition. So we see many deals where we see, I don't think some of my competitors could get that approval, and I can, or could get it as quick as I can. So in that sense, again, I'm not saying if it's good or bad. Obviously, it's not making the market very efficient, but within an efficient market, being where I am happy with the way it is. And also in our experience, it helped us engage a lot with the government. So it gave us a level of access before that we would not have never had. And engaging with them also makes you understand like what their concerns are and the information they have, because there is a lot of asymmetry of information. I cannot opine on things they do because I don't have the full picture. So in that sense, also it was an opportunity for us. And again, because we see ourselves as 50, 100-year and long-year investors, we don't think about the impact of this on someone who could potentially buy our stake in Naturgy or Aqualia, because we're not sellers, so we don't really care. And as a buyer, if it makes the competitive landscape worse, so in our favor, we're happy with it.
And there are those who have doubts or certain doubts about the role of international funds as investors in strategic companies. What would you say that an international fund contribute to the economy of Spain and to the management of the portfolio companies?
Obviously, I'm biased in my answer, but from our experience, like the key things has been, first, obviously, we provide a lot of funds. So we look, in our particular case, for platforms or global players that are based in Spain that have huge plans of expansion, and just with their operating cash flow, they cannot fund them. So we like to push them because actually the Spanish managers are smarter than we are. So actually they get better returns on their investments in the companies than we do doing M&A. So that's why we push them to do more. Second, being a large investor with a lot of shoulders, when we enter some of our companies who have a non-investment grade or low investment grade, when the rating agencies see that it's IFM behind them, that actually improves the rating, so lowers its cost of financing, and basically makes the managers' lives easier. And ultimately, being a global fund actually gives these companies opportunities to grow in countries where they are not. Like Spanish companies are great to get exposure to Latin America. Some of them are in Australia or in the US, some are not. So we actually try to help them in terms of expanding their footprint.
Mm-hmm. Okay, so as I said, we are all facing the start of a new year, and I'm sure you are, the four of you, very busy looking at potential investments. What would be, Enrique, the key sectors that you would be looking at in 2024?
Well, that is sorry, I don't think that is the way we look at it, or the way investors look at it, okay? I don't think investors or international investors, national investors, we are a mix because we are local, but our investor base is international. Normally, we don't look for sectors, we look for companies, and we find good companies in many, many sectors. Most international investors are not necessarily sector-driven. And I can tell you, we look back to the last 17 years of Magnum. We have invested a lot in healthcare technology, healthcare services. We have invested a lot in industrial companies in Spain. About 40% of our investment is in industrial company. We have invested in B2B, in education, in technology. So there are great companies in many sectors in this country. It is true that the fat of the day is renewables, although it has been for the last 15 years. And as Pepe Bogas was saying before, some funds like ours have an inherent difficulty in investing in energy because it's a very regulated industry related to in what is related to hydrogen, etc., the subsidies, and we don't touch that. So renewables is in fashion, tourism has always been in fashion. Agriculture in Spain is incredibly powerful. incredibly powerful, and people don't know that. But we are the source of agri products for most of Europe. Okay, in the Murcia and Almeria region, in terms of food processing, we're also very strong, and we are very strong in sectors where high caliber, highly qualified people with high technology backgrounds can provide services because we have cheap qualified labor. Okay, and so yes, there are good sectors where there is more likely to be a transaction than in others, but there is good companies everywhere.
And if not looking at sectors, José Luis, what, and I think COFIDES would be more or less the same example, not focused on particular sectors, what would be the key drivers that you will be looking at during 2024 when making a decision to invest?
Well, I would like to introduce here that we have been just allocated a fund by the government, a 2 billion euros fund called FOCO, Co-Investment Fund, that is to co-invest with foreign investors, either companies or funds, into companies incorporated in Spain, in activities linked to the next generation EU activities that are under the umbrella of the transformation of the European economy. This is going to be is already operating. The fund is fully fledged today. It was approved in December 27th, so we are beginning to make the first analysis. We hope to have the first operations approved before June or so, and the activities that a priori, but analyzing the pile of projects that we are studying right now are related with renewables, are related with automotive, related with batteries, biotech, some of them in food. So there is a wide array of projects that are very much linked to the activities of the Spanish economy. The fund could take tickets of up to 150 million euros for investment. It has to be minority, our participation, so the foreigner has to invest at least the same amount that we invest, and the idea is to take mostly equity positions. We can invest either directly in individual investments or in funds that otherwise that afterward will invest in companies. The important thing is that we will match, or we could say match, or we will at least multiply by 2 the amount of money that foreign investors is investing in Spain. So this is basically the main references of the fund. We think that is going to be we are perceiving a big demand of resources for the fund.
Okay, thank you. I think we are starting to run out of time.
We started late.
That's true. Just to finalize, a question for the 4 of you. What would be the changes that you would ask politicians from all parties to implement in order to make Spain more attractive for investment, like the Carta a los Reyes Magos that you would ask for? Juan María.
Well, it is a Carta to los Reyes Magos, so this would take a lot of time, and I will share part of this letter with my good friends here, so that in between all of us, and I do not cope, no? But I do think that first, clear rules, as always. We need a sound legal system in all senses, in terms that legislation is foreseeable, no surprises. The judicial system must also be a clear support of the rule of the game. Negotiations, as I said, and agreements with the government on some specific deals or sectors must also be feasible and professional. And having set up the infrastructure in order to make next year and forever and ever this country a very attractive country, I would like to remember that we, as Spain, we are attractive by definition. And this is so because we have a big difference with other European countries, which is our lack of capital. This is a country which is not capitalized at all since the 17th century. So the country has a huge potential. It has everything, included what I said, which is and can improve and must improve. But as a country, we need this capital. So this is the most important thing. The letter is to bring in more and more capital. And the stepping stone is that not even this country, in terms of capital, is below our competitors in Europe and outside Europe, pure capital, but also we have other advantages, no? Which is that this is the best platform in the world. If you see our country, it's a physical platform, and you cannot imagine a better platform. This, in terms of investment, is very important. The platform has developed good logistics, infrastructures, which is a good complement. And added to that, this country has a culture which is, let's say, in terms of market, investment, etc., let's say the first or the second culture in the world, no? And these three supports, the physical platform, infrastructure, and our platform, are something enough in order to make sure that the capital we need comes here, provided that the legal system, the judicial system, and the governments behave as expected by those investors. So we are in the best of the worlds.
José Luis, in your case, what changes do you think could be
I will
implemented?
subscribe 100%, and
Thank you.
I will say probably to add something, reduce the noise, and like it, and accepting that I think that we have to recognize ourselves as the country is much better than what we think about. So I think this country, especially if you compare with our peers, behaves quite well. Of course, it could be much better. And I think that all of us can identify all the problems that we have. But I will say that that is a problem of always thinking in the negative way of ourselves. So,
Jaime, in your case?
I mean, we've invested over 8 billion, so overall we're pretty happy with where things are. For us, as a long-term investor, the biggest challenge is demographics. Like almost no children are born, and as you look through 40, 50 years, that has an impact on economic potential and output, and we don't see really measures to improve that. And other countries have, like Hungary, they said like women who have 3 or more children don't pay taxes for their lives, and I think they doubled the birth rate. So I think I don't know if it's because like people are not focused on it, or because, I don't know, like I struggle to understand why we don't put more focus on it. It's a huge risk, and it's one that in 10 years' time might come back and bite us as we get older and older, and the budgets are not sustainable. So that's really our big ask.
Mm-hmm. And Enrique?
Well, I think that in general, we must not be complacent with the status we have by definition, because if we are complacent, we don't improve. Having said that, I think that in terms of a destination for international investors in private equity, which is what I know of, Spain is seen as a good country in terms of growth potential, that's for sure. Growth potential, technical growth potential in Spain higher than in the rest of Europe. It's seen as a good country in terms of deal flow. There is good deal flow and a stable deal flow. So in general, if you put money here, you're going to be able to deploy it. There is a very good track record of returns. Okay? Over the last 15 years, private equity firms in Spain have got stable and good returns, and there is good financing. Okay? So all that is there, and that is good, and that is why a lot of people invest in this country. On the flip side, I subscribe again 100% with what Juan María is saying. I think international investors don't see Spain as a tier 1 country yet. They don't. They see as tier 1 countries UK, Germany, Scandinavia, Holland, but not Spain. And I think I would definitely urge the government to ask why. And if I have to tell you a reason as to the why, I think, as Juanma was saying, regulation changes too much. There is no reliability on regulation, and this is why we, for instance, avoid regulated sectors. I think fiscal policy changes too much. I mean, tax policy, not fiscal policy. Tax policy changes too much, and I think it's a mistake to think that we need to have a lower tax rate than the rest, than the other countries to attract investors. We just want the same, not worse. Okay? We just want the same tax rate as UK, Scandinavia, Holland, Germany. Not less, no more. And the same, it's exactly the same. It's easy to copy. And third, legal stability. And legal stability and legal reliability and previsibility has to do with the legal system, with regulation, with the judicial system, which has to be stable and predictable, has to do with paying your international arbitrage laudos, has to do with having a tax inspection that is also reliable and stable and friendly and not against everybody. Okay? And I think those are our to-dos.
Okay. Thank you very much. I think the conversation has reached the expectation. It has been very productive, and it has helped to understand the different views from different perspectives. Thank you very much to José María, to José Luis, Jaime, and Enrique. It's been a pleasure to share this roundtable with you, and thanks for being here. Thank you, everyone.